I don't think you should really care about Trump and the markets and tariffs. The markets had a small correction. I don't, I've said this a million times. Focus on what you can do. If you want to be a macro person, you can do that. You'll have to find like a really good macro person to follow because it's not me. People on Wall Street, like, you don't do it all. Like, I think the average retail investor doesn't understand that, like, if you have a job on Wall Street, your job isn't to worry about global, trade policy and then also worry about biotech in the same day. It doesn't make any sense. You stick to what you can do effectively and ignore everything else. I would drive myself crazy if I had to worry about the macro environment and like how it's going to affect stocks, and then also worry about, if Anavex is going to EMA approval, right? And then also worry about what's happening in crypto or what's happening in real estate or what's like, what? I know who good macro guys are, but they're not people online you can follow. So I don't know. To me, I think it's a pretty simple formula that we're doing, that I'm trying to teach and have people follow. And you can see that I'm trying to ignore, the BS. At the same time, I feel like people are curious. They want to know about it. But I think you have to look at companies. Let's look at PayPal, for example, which we worked on extensively yesterday. We actually didn't really do a DCF, so let me quickly do one. But the point I'm going to make, which I want you to really internalize, is that a company is worth the discounted sum of its cash flows. Nothing more, nothing less. Why? Because ultimately, if you're a business owner, if you've ever been a business owner, there's one thing that matters, which is your bottom line at the end of the year. And it's no different with a publicly traded company. In the long run. In the short run, there's all kinds of noise and nonsense. I'm trying to encourage you to ignore those things. Why? Because the market is a discounting machine. It is very, very good at also ignoring those things. In relatively short periods of time, the market will see what you see. There'll be noise. The price may not go exactly as you planned. You may get it wrong. But if you follow this method, typically you will you'll be successful because the market will discount the long-term cash flows of the company into the stock price. And the long-term cash flows, here's the real big point I'm trying to make. The long-term cash flows of PayPal have nothing to do with Donald Trump. They really have nothing to do with trade policy. They have nothing to do with anything other than things that affect PayPal specifically. And so to me, and again, I'm not disparaging anybody that looks at the world otherwise, but the way I do things is it would be the very irresponsible and just downright a waste of my time to worry about any of those other things. Because my job is to worry about PayPal. My job is, if I'm trading PayPal, is to learn the payments industry, which quite frankly I don't know that much about, but here's the point. I can take my time, which I have very limited amounts of, and I can invest it in learning a fascinating industry, the payments industry. I learned a little bit about it yesterday. I was reading about Visa, and I could spend a few hours learning about it more today. Or I can worry about what some politicians are doing that I can't change, and that if I hedge appropriately, it doesn't affect me at all. Or at least it affects me very de minimisly. Because for everything I'm long, I have a short, and more or less, it's not going to really impact my portfolio. And the market is smart. The market says, well, even if Trump does this, let's say Trump goes hog wild with tariffs and never stops. Okay, if they're a good move, the new president will keep them. If they're a bad move, the new president will reverse them. And as we discount these cash flows, I really want you to pay attention to this. I've just built a mock sort of DCF. It's pretty elementary, but it'll do for our purposes. And I'm going to bold the net income line, which is the line we really care about as a business owner. And when we buy a stock, you become a business owner. You're a very small business owner, a small fraction of a very large company in this case. But as you become a better investor, you might become a more serious holder of some of the smaller companies. I've certainly owned big chunks of publicly traded companies, so you can do it too. And Warren Buffett, for example, owns big chunks of big companies. But here is the net income. Well, let's just do this real quick as a exercise. Here's the net income theoretically for PayPal. Next year they'll make $6 billion. And the next year they'll make 6.2, and the next year they'll make 6.6, and the next year they'll make 7.1. That's the ideal situation. They may not do that. At maturity, let's assume they'll grow 1%, which is a very modest amount. And I think some of you will give yourself a gold star, and some of you will realize investing is not for you after this question I'm going to give you. So I'm going to discount all of the cash flows by 8%. Okay, and a company goes into perpetuity. It goes out till forever. You know, PayPal may be here 100 years from now. I don't know. But it's telling me that the value of all these cash flows is 121 billion. Now, this is a very dry formula. If you don't know the formula, then I encourage you to learn a little bit of finance, because this is the financial business after all. Okay. So we assume that this is right. This is, when I sum these numbers, they actually sum to a trillion. But because we're discounting them, because the dollars of 2042 are not worth the same as the dollars of 2025, the discounted sum is $121 billion. And that's a lot higher than the current stock price, which is why I like the stock. I didn't even need to do this calculation yesterday. I just knew it. Intuitively, I wanted to finish the details, but this was more than good enough, just looking at the numbers in my head. But now that they're here, I'm very happy. Now, I want to graph this, but what I'm going to do is I'm going to copy-paste this, okay? I'm going to copy-paste it maybe down here. I'm going to say this is with or without Trump, okay? And let's say Trump makes the earnings for PayPal for the next, when does his term end? 2028, right? He makes earnings for PayPal for the next, is it 26? 28. 28. He cuts them in half. So it's going to be half the earnings for PayPal. Now, that's not what's going to happen to PayPal, but we're making an extreme example, okay? 50% cut to PayPal's earnings. And the new president changes it back. So if we graphed these two, they would look like this. It's the same line, except The orange line has this like lower earnings, and then they come to the same. When the new president comes and changes things back, perhaps a Democrat, perhaps a Republican, we're back to normal. Now, there is a possibility the new president doesn't change things, but let's exclude that for now. What is the NPV of the bottom line? What is this NPV of this line? Where the next 4 years of earnings are hobbled? Take a guess. I want you guys to think about it. Is it a lot different? It's not a lot different. And that's kind of a worst case scenario, I think. The market's smart. The market's pricing these things in. The market knows that we're not going to destroy capitalism as we know it. Certainly not for most companies. That's why the market's up 42 basis points and not down 40%. If earnings were permanently changed, the market would be down 40%. But we have systems that keep those kinds of things from happening. If presidents make a mistake, then we have systems to correct that. If presidents make a good move that people thought was a mistake, which maybe this will be, who knows, then the market will figure that out too. If nobody's sure, well, the market will price in some amount of uncertainty, and we'll go from there. But why in the world would I worry about this? It just doesn't stand to reason. There are people who make money trading the macro environment, but they also never look at stocks. So they trade big baskets of stocks. This is places like Bridgewater, Discovery, Element. There's great Soros. There's great macro investors out there. But they're trading currencies. They're trading bonds. They're trading CDSs. They're trading indices. They're trading interest rates principally. This is not the kind of stuff we trade, and it's not the kind of stuff you can trade. You don't have agreements with Goldman Sachs to trade steepeners and flatteners, do you? So why do you care? I think a lot of people care because they want to maximize their portfolio by timing the market. They're saying, okay, well, maybe the market will go down, so I'll buy then. And do you think the market's going to go down, Martin? I think it might. Well, this is called gambling. And I'm just not going to participate in that because I don't know what's going to happen in the stock market today or tomorrow. And because I don't trade interest rates, I don't trade currencies, I don't trade commodities or indices. I don't want to trade those things. I want to trade stocks. I want to look at one stock and say, oh, this is a good stock and buy it. I want to look at another stock and say, oh, this is a shitty stock. Let me short it. And I more or less can try to make money on both directions. And my skill as a stock picker is the thing I'm betting on. Now, I've never met a single person on Wall Street that does all of those things. That looks at every asset class and trades every sector of the world and every asset class of the world. I've never met a single person that can do that. And there's a lot of arrogant people on Wall Street. Nobody is that arrogant to pretend they could do it all, which is surprising because Wall Street's a pretty wild place. But they would get laughed at. And I would laugh at you if you think that that's something you want to do. So if you want to trade macro properly, all right, trade interest rates, trade bonds, trade indices, don't look at stocks. But you're on the wrong live stream. That's not what we do over here. Now, could I do that? And could I show off some tools that we're building at Godel and DL Software to do those kinds of things? Yes. I think eventually, as we build those tools out, I'll probably do a little bit of that. But right now we're sort of in our stock lane, which is the lane I've lived in my whole life. So switching to another lane is pretty uncomfortable anyway. But I will show off some tools at some point. But it's still, when I do that, you'll have all my admonitions that this isn't what I do. I don't know this stuff really well. I'll be learning just as you would be. And I certainly wouldn't be putting lots of real money on that. So that's kind of the point. The long-term prospects of a business really have nothing to do with government and government moves, as they shouldn't. So, that's sort of the way I look at it.